Glad to know you stay with us. The Nigerian equities market experienced a rare decline in November, with all-share index falling 15 basis points to close 97,506.87 points. This marks the first negative November since 2018, breaking a 5-year streak of gains. Now, despite subdued price movements, trading activity surged with a 28.74% increase in volume to 10.8 billion shares. Year to date, the ASI remains robust, posting a 30.4% gain, while market capitalization held steady above 59 trillion naira. Nabila Mohammed, research analyst at Chapel Hill Denham, joins me for this. Hi, Nabila. Thank you for joining me today.
Thank you for having me.
It's always a pleasure. Now, how would you describe the NGX in November, seeing that this is the first negative close, in a long time? What do you think changed?
So, as you know, if we are looking at the past 5 years, a lot has changed in terms of market activities, in terms of the ASI itself. We've recorded the 100,000 points, sometimes this year even higher than that. So a lot has changed in terms of sentiment, and even in companies that are listed on the exchange. Now, we've had additions, we've had listings, we've had a couple of things change over the period of time, but particularly for the month of November, the stocks that actually contributed to the losses in the market or to the loss for the month of November include Seplat, Wando, Boa Cement, and MTN that accounted for over 70% of the losses that we saw the ASI record in the month of November. And if we're even looking at these stocks individually, that's looking at the likes of Wando and how it has surged in terms of share price performance. We've seen Seplat prior to the last week of November at higher 140-something% in terms of share price performance. So it's expected that you would likely see some level of profit-taking activities in some of these names, given how much we have performed in terms of share price performance. And this is really what played out in the month of November. These stocks did contribute to the loss that we recorded for the first time, as you rightly said, since 2018. Now, we did also have some gainers or some positive contributors, but it wasn't sufficient enough to counter or to mask the losses that we saw in names like Seplat and Wando, as well as MTN and Boa Cement, which happen to be large cap stocks.
All right, now talking about these 4 stocks you just mentioned, for Wando, would you say the same? I mean, is it just profit taking, or investors are probably skeptical looking at, some of the things that happened about the results, releasing, not releasing, getting suspended, maybe some level of corporate, governance fears or concerns?
For Wando, we do not cover it in-house, so I will not be able to give strong views. However, what we know that is fact-based is the fact that for their H124 performance, we did see a slight decline in terms of profitability. Now, it does not mean that they were not profitable. It just means that profit-wise, there was a decline on year-on-year basis that we are looking at their H124 performance. So it's expected that investors will do not really welcome that lower performance or slower growth in terms of PAT performance for the year for the H124 review of financial results. But then it's also an indication that going forward, since they have consistently published their results as expected by the market, we may likely see them progress to dividend announcements, which will be positive for investors that are still holding the stock.
Absolutely. Now, irrespective of the general stagnation, which you also alluded to, several sectors posted gains. And I really want to talk about this, which is the insurance with 9.11%. I mean, the other indices were within 3% and less. Banking, for example, was around 3%. No, so talk to us. Is this about many of its stocks being low-priced stocks, or what do you attribute to this, gain?
I would put it this way, for the insurance sector, it remains appealing, particularly for the retail investors, given, as you rightly said, the level, the prices that these stocks trade at, which is around 2 naira per share from a naira standpoint. And that alongside the fact that there is an ongoing talk around recapitalizing that sector as well, is also spurring some form of activities or interest from investors' standpoint in those names. So we're likely to see that continue until there's more clarity on how they intend to recapitalize the insurance sector. But yes, as you rightly put it, lately we have been seeing interest in that space, and it's mostly from the retail investors, given where the prices trade at.
All right, I know one of the top gainers for the month was JOHNHOLT, but away from JOHNHOLT, I'm interested in flour mills. Now, this is why. It's the 7th on the list of gainers, and apart from that, in September, it offered to pay 17 naira per share to minority shareholders because it plans to delist. But with the stock closing November at 81 naira 10 kobo, and just yesterday it closed 81 naira 50 kobo, do you see an increased offer in the offing?
I would say no to answer your question upfront, but I will give you context to why my answer is no. And given the first time when they announced the price, the proposed price, which is 70 naira, the price was 55 naira. Specifically, I'm talking about 24th September 2024. That was when the disclosure was made on the NGX. And from that 55 naira, we have seen the stock rally to as high as 81 naira per share, as you rightly said. Now, the proposed price is 86 naira, which is based on the increase, the 23% increase from the 70 naira levels that was previously announced. They now proposed 86 naira. Now, from that 55 naira to the 86 naira, a 55% is what we will be likely for investors that held it as far back as they enjoy when this deal goes through. Now, you agree with me that 55% within a span of what? 2.5 months is enough to convince investors to accept this new price at 86 naira, which is why I do not see another additional increase in the offering because of the rating that the stock has enjoyed over this period of time, this short period of time.
You don't see investors being more bullish, going more bullish on it?
There's still headroom, and it's enough the rating we have seen, based on my own opinion.
All right. Now, a range of corporate actions unfolded in November with the release of third quarter results, comprising the bulk of, the key disclosures for the month. How did these results influence the market in less than 30 seconds, if you can?
As you know, markets move based on sentiment. So if investors perceive a result to be positive or course you will see it influence or impact their share price. And that is what happened. Just like we saw in the case of JOHNHOLT, we didn't cover it, but what we have seen is that for the first time, we did see the company return to profit in their full year 2024, which ended September 2024. So they posted a profit of 2.3 billion versus a loss of 1 billion, which I believe is partly the reason why we did see JOHNHOLT record those gains in the month. So this is just an example of how corporate results can actually spur market sentiment in terms of the rating of a stock or the rating of stock. It depends on just the point of view where the investor stands from.
All right. Thank you so much, Nabila, for sharing your thoughts with us. I do appreciate that.
Thank you for having me.